Greetings, folks. Welcome to Moneycontrol.com. Since the announcement of the Union Budget 2023-2024 and after RBI's MPC meet in early February, what we have seen in the banking sector is that more and more banks are luring customers by hiking interest rates and giving useful deposit schemes rates. To see more on that and to see how particularly small finance banks are performing, we've got with us Mr. P. N. Vasudevan, the MD and CEO of Equitas Small Finance Bank. Thank you so much, Mr. Vasudevan, for joining us.
Thank you.
Sir, firstly, I would like to start off with your bank's Q3 results. What is your outlook? You produced a good profit in your third quarter. So what is your outlook for the same?
Morning. We had a pretty good third quarter, as you probably know. Just to put things in perspective, when we became a bank in 2016 from being an NBFC, our unsecured loan book, which is principally the microfinance book, was 53% of the total advances. And the demonetization had an effect on the microfinance book, and our ROA went down to as low as 0.3% in March 2018. But consciously we have been paring down the unsecured book, and we have been improving the contribution from our secured loan book. And today we have reached a situation where we have only 18% of our book is unsecured in the form of microfinance, while the remaining 82% is secured by various asset categories. As a result of this, when the COVID happened, of course, again, COVID had an impact, like on everybody else, it had an impact on our borrowers also. And that means that our own financials were also under some level of stress during the COVID period. But the minimum ROA that when we went down to was actually 1.1% for the year ended March 22. Compared to the 0.3, which we went down in FY18, it was down to only 1.1. So the impact was not as bad as the demon period. And also the other thing is that in a matter of 3 quarters, we were able to come back to a healthy ROA of over 2% and a healthy ROE of around 15%. We were able to do that in the December quarter. In just about 3 quarters, we were able to come back quite sharply. This just shows that our book has become a lot more resilient today than what it used to be, and obviously contributed significantly by the fact that 82% of our loan is now secured. So I think we really are hoping that we are in the process of creating a very stable, sustainable, and scalable bank. And that's what our journey has been. And that journey should continue further going forward.
Right. Looking from the past few months, what we have seen with banks and NBFCs as well, that they are increasing their interest rates. They're luring more customers to get fixed deposits with them. So how do you see that, and how is Equitas Small Finance Bank working on that?
Yes, so we have been increasing our deposit rates over the last 2 quarters. We have raised it, I think, thrice in the last 6-7 months. This is obviously a reflection of the rising interest rate scenario in the country as a whole, as a general. What we do is we try to see what's the gap between our interest rate on deposits compared to the interest rate on deposits offered by the larger banks. The universal and the larger banks. So we try to see what's the gap between our rates and the large bank rates. We are a new bank, and we are, of course, a smaller bank. And so to some extent, it's a reality that we have to offer a slightly higher rate to be able to motivate a depositor to put his money on us rather than on any larger bank in the country. About 7 or 8 months back, or maybe about a year back, you can say that the gap in our interest rate on deposit compared to the large banks used to be nearly 1.5%. No, large banks have also raised their interest rates on deposits, and we have also been raising it. But we have been trying to calibrate to the extent that we can. And today, that gap of 1.5% has come down to just around 1% between us and the larger banks. So, to some extent, we have been able to manage the escalating interest rate cost to some extent. And then, as we become an older bank, as our brand awareness keeps improving, and over a period of time, I'm hoping that we can keep reducing the gap between us and the larger banks. As more and more depositors come to accept Equitas as a brand, and the trust on the Equitas brand keeps improving over a period of time. Maybe we can keep reducing that gap a little bit. But otherwise, currently I can say that our gap is probably about 1% higher than the larger banks.
Picking up from the competition that small finance banks have, how do you see that? Because lately we have seen fintechs players coming in the field and giving a fierce competition to small finance banks, particularly. So, how do you see that happening in the coming quarters in the future?
See, the small finance banks have a very, very strong niche of their own when it comes to the lending side. See, on the deposit side, as I was just mentioning, we are in competition with all the large banks in the country. And so obviously we are paying, as I mentioned, slightly higher than the larger banks. But when it comes to the lending space, actually we are in a very, very strong wicket on that side. See, the kind of customers and the segment to which we lend to, the larger banks are not really there in that market, and they are really unlikely to be able to come into that market anytime soon. The challenges of lending to the informal economy borrowers is very high. These customers really don't have proper income documentations and all that, and the cash flow, the credit assessment is almost exclusively done based on cash flow analysis of the customer. And that cash flow is not something that you can actually see on a piece of paper. You have to actually sit in a shop, you have to count the footfalls, you have to count the kind of volume that he does per day, and then extrapolate it to a monthly level, and then do a lot of vendor verifications to see whether what we are extrapolating is correct. And then we have to knock off the expenses that he is likely incurring on his business. I mean, it's a very rigorous process, really rigorous process to see what is his net margin in the business, and how much can he afford to repay as an EMI out of that margin. And then you set a loan limit on that. It's very difficult business to do. And that is why in our last quarterly presentation, December 22 presentation, we actually set out some data. I think in page 11, 12, 13 of our presentation, we set out some data which shows that the demand for credit from small businesses in the country, informal sector small businesses in the country, who also have a house property which is available as a security to give to the banks, that segment demand is something like 22 lakh crores. Can you imagine? 22 lakh crores. And the level of servicing of that demand is around 4% by the banks. 96% of that demand is not serviced by the banks even today. So on the lending side, small finance banks and especially Equitas, we are sitting on a very strong niche area of our own, where large banks will be, actually in my view, large banks can really not do this business because it's just so difficult. It needs to be in your DNA. And just to give you some small data or statistics on that, if I remove my microfinance lending and just take all other lending, my average ticket size per loan per customer, average ticket size of loan is just around 6 lakh rupees. So I think that's as micro and as granular as it can get. And so generally all of us, and definitely Equitas, we are sitting on a very strong niche market. And on the lending side, I believe that we don't have too much of competition from the larger banks. And we are actually creating markets. Frankly speaking, we are actually creating markets. We are creating inclusive growth for the economy, and we are actually able to bring about a serious level of financial inclusion from the informal sector of the country.
So picking up from that the small finance banks have an upper edge over fintechs when it comes to lending as such. So other than these things, what on the opposite side, what challenges do you think that small finance bank and your bank particularly faces in the sector when it comes to business from lending to deposit to everything else? What are some challenges that small finance banks face?
Yeah. So, typically, as I mentioned, on the deposit side, we are head on with all the large banks. On the lending side, as I mentioned, yes, we do have our own niche, so we are not too much concerned about competition on the lending side. But the kind of businesses that I just described that we do has a high level of cost associated with that. So it's not a very cost effective means. It's actually quite a costly process that we undertake, and the number of people we employ is very large. I have 25,000 crores of loan book, and I have about 20,000 staff. So practically it is like 1.25 crores per staff. And if you look at any other large bank or even reasonably mid-sized banks, that loan size per staff will be much higher than ours, which means that my operating cost is going to be high. So one of the challenges that you mentioned, that you asked me, clearly is our operating cost. This is a model where we don't outsource. We really don't outsource because it's very difficult to manage this kind of business by outsourcing. So we employ our own people to do everything from credit assessment and putting up sourcing customers, credit assessment and collections. Everything is done by our own staff, which means that we are sitting on a high cost model, and also it's a fixed cost model. It's not variable because I'm not outsourcing, so it's not variable. So one of the challenges for small finance banks and one of the challenges for Equitas also would continue to be the fact that our cost to income ratios will be on the higher side compared to the larger banks. And given market where we are able to grow at our normal pace, this cost is easily manageable. But like what happened in the last 2 years during COVID, our annual growth rate was around 15%, whereas our normal growth rate is around 25 to 30%. So our last 2 years, because of COVID, the growth rate had dipped to about 15%. And those are the times when a model like this can kind of drag you down a bit, because I can't reduce my cost at the same speed at which my business goes down. I can't do that. I can't just sack all the staff or wind up branches just like that. So I have to ride the cost for some time till the business picks up. So one of the challenges for small finance banks is managing cost, and that is where technology comes in. How do we try to leverage technology to ensure that as much as possible we move our elements of operations to a technology platform, trying to use less and less of human resources wherever possible. So those are the various challenges in front of small finance banks, and that is where I believe that investment in digital and technology is something crucial for people like us, so that over a period of time we build a very robust physical and digital combo model, which helps us to improve our efficiency and also support us in times of distress like COVID, support us from a cost management perspective.
So, talking about your recent reverse merger, how is that working on your finances, and how do you see that the your merger would work on your finances in the coming quarters?
So this merger was something that was on the cards for quite some time, because when we listed the holding company in 2016 itself, we had made our intention clear that as and when we get regulatory approvals, we would seek to merge the holdco with the bank, because the holdco never had a business model separately of independently on its own. The holdco was only acting as a technical promoter of the bank and holding the promoter stake in the bank. So the merger was something that was always on the cards and something we were working on, and finally, thankfully, all approvals are in place and the merger is now completed. And in fact, the bank shares have been allotted to the shareholders of the holdco. I think about a couple of weeks back. So the merger is now completely behind us. Because of the merger, two things happen. One is, of course, that we become a leaner structure. We have only one entity now, Equitas Small Finance Bank. Earlier, we are having two entities, which is always a little bit of a challenge from the operation side. We are now having only one entity, so that makes it a lot more leaner for us to manage. The second thing is that because of the merger, some amount of cash in the holdco has come down as net worth into the bank. So our net worth has actually gone up by about 350 odd crores. And today the bank's net worth is around 5,000 crores is the net worth of the bank. And because of that, the earnings per share, everything has actually improved over because of the merger. We also set out the full details of this in our December 22 investor presentation to show the positive impact of merger on the financials of the bank.
So recently you mentioned that your bank would be approaching Reserve Bank of India for a universal bank license. Any update on that? Any timeline or anything on that?
So that's again something that we will seek to work on. That's something that we are keen to work on. So we will be in touch with our regulators, and as and when they permit us, then we would really like to apply for the universal bank license. So that's something that's a work in progress. So we will know over a period of time when RBI will permit us to apply.
Just one last question. How do you see that this year would be different from last year for small finance banks, considering every macro and micro reasons as such, the challenges and benefits? How do you see this year to be different from last year?
And by this year, you mean 23, 24 or 22,
23,
23?
24. Yes, yes, that's right. 23.
So I believe the country is fairly back on an even keel now. The COVID scare is really gone quite away from all our mind now. Thankfully, life is back to normal in the country. Our GDP for next year is estimated at 6.4% against 6.6 or 6.7 estimated for the current year, which means that we should look for one more strong GDP growth year next year also. Inflation is on the slightly higher side, but still even that has been trending down, and we are not very far away from our 4 to 6% targeted inflation level. So I think overall on the macro side, if you look at it, within India, I mean, we seem to be on a pretty strong wicket. Globally, of course, there are a lot of tailwinds and a lot of headwinds globally. But India is still a very large consuming economy, domestic consuming economy. So to some extent, in spite of whatever happens in the rest of the world, hopefully India will still be able to sustain a decent level of growth internally because of our own domestic consumption. Given that scenario and given that background, and given the fact that the small finance banks actually lend to customers who are using it for daily use products and services, for example, the loans that we give are for people who run a provision store, who runs a barber shop, who runs a small eatery, or who runs a two-wheeler mechanic shop, or who runs a cell phone repair shop. I mean, these are the kind of guys to whom we lend. These are like evergreen businesses. I mean, whatever happens, people need to go and get their haircut, and whatever, except Corona. I mean, Corona is such a one-off stuff which affected everybody, but otherwise you need to get your haircut all the time. You just need to go and eat something in small eateries. So these are evergreen businesses that we lend to, and to that extent they are very resilient. Our borrowers are pretty resilient. That's why historically, even though the kind of lending we do is deemed to be a high risk, in a sense it's deemed to be high risk because they are informal customers, right? But historically, pre-corona, my GNPA was around 2.5% only. And today my GNPA is 3.4 in December, but very shortly I'm sure it will come back to our pre-corona levels. So the resilience of our borrowers is very strong. And so next year, given the fact that the macro is looking to be quite supportive, and given the fact that the kind of customers that we deal with are very resilient people, I think small finance banks in general and Equitas definitely in particular, I think we should have a good year.
Noted. So, what we see from your bank's end is that after a good financial result, we see that the coming quarters would also produce similar results. And also for the larger small finance bank sector, we see that days ahead are optimistic and would produce financially healthy days. I would like to thank Mr. Vasudevan for joining us and all our viewers who have joined and watched us. Thank you so much.
Thank you so much.
Thank you.
Thank you for having me on your show. Thank you.
Sure. So, thank you so much. For more news on banking and business, please visit